let's have a look at one company which would like to forget what happened yesterday, but shares are recovering. We're talking about Baidu. It did deny a report linking its AI platform to Chinese military research. Now, Bloomberg Intelligence says the potential for US sanctions on Baidu essentially could have a big and wider impact on China's tech sector. Senior analyst Robert Lee is with us now. Right, Robert, what are the implications here? I mean, ultimately, because surely we've been seeing this Beijing-Washington trade war with technological characteristics going on for quite a while.
No, that's true. I mean, first of all, just on the company, without wanting to sensationalize things, I mean, China and the US are locked in a technological war at the moment, with AI being the main focus of that. And we've seen various moves from the US administration to restrict China's access to AI-designed chips from the likes of NVIDIA, etc. So I guess, regardless of the merits of yesterday's story or whether how much truth there is in it or not, there are a number of people within the US Senate and elsewhere within the broader US administration who could potentially use this story as, this is another potential piece of evidence as to why we should tighten things further. So I think the risk to the wider sector is that we could see an increase in the restrictions placed on Chinese companies' access to US technology overall, with AI being a core focus.
Well, what's it out for Baidu's core business through the course of this year? Because I've definitely got to question what the core business is now as well. I mean, is it now going to be AI-related stuff?
I think the reality, you look at the hard numbers that they report, this is still a search engine business. So obviously they have been heavily investing in AI, either across autonomous vehicles or their only bot ChatGPT-like product for a number of years. But those various AI ventures are loss-making in aggregate, based on our view. We don't see any prospect of them even breaking even, let alone breaking into profit over the next 2 to 3 years. So the reality for Baidu is that it's a search engine business, and it's a very well-positioned search engine business, very cash generative, but that's a low-growth sector. And, the driver of search engine revenue is advertising. So obviously, with the corporate sector slowing, with increasing caution coming in, there's a risk to their core revenues, which completely underpin the cash flows and profitability of their business. And more importantly, the cash flows coming from search is what is funding these loss-making ventures in AI. So there's a question mark and a risk factor there on their core business.
Robert, okay, what about the AI sector in China? Who are likely to be the winners and losers? What does it all mean? And looking at that in aggregate, I suppose.
Yeah, I think as we've seen many times across different subsectors within tech, not just in China but elsewhere, scale ultimately wins out. And the way that the software companies are trying to monetize their AI investments at the moment is through their cloud business. And cloud is absolutely a scale business. So I think in the long run, it will be the likes of Tencent, Alibaba, arguably, some of the other larger tech names. But I think the likes of Baidu, whilst it had good market leadership in the early days, that is rapidly being eroded as these tech giants increasingly narrow the gap and, with their huge balance sheets behind them, putting a lot of resources into the sector. So whilst, I wish Baidu well, I think it's going to be an increasingly challenging story for them over the next, not just the next year, but the next few years.
Robert, is there any kind of interest coming from outside of China in these stocks? I mean, are we getting more interest from the US at all in any way? And, of course, there's so many kind of barriers, such as, the threat of regulatory action and the like.
Yes, great question. As you're aware, a lot of funds out there at the moment are either sitting in their China positions or have been actively working them down, with a minority only able to add based on various internal restrictions or otherwise. And to be fair, I don't think we're going to get a major change through this year, regardless of what the valuations may look like. And ultimately, the stock market is driven by many factors. Supply and demand is one of them. So the question would be, where are the incremental buyers going to come from this year for China stocks?
Watch this space, in other words. Robert Lee there, senior analyst at Bloomberg Intelligence.